I am Mayur Jagtap and welcome to My Capital Choice. So today we are going to look upon some parameters which may decide the upcoming trend in Indian economy or overall capital market. So let's see one by one. So first is USD INR, which is currently rate at 75.64. So it may cost around 84 to 82 rupees. This range will be intact for USD INR in upcoming times. But here is also downside possibility also. If we are going long with USD INR, so we have to stop loss at around 72. I know it is very large stop loss, but in the sense of target we are focusing it is 84 or 82. So it may take time, it may take time of 3 or 4 months or 6 months also, but as current situation going in politics and other issues with Indian economy, that showing us this USD INR will hit at least 80 to 82 rupees in upcoming times. So it is very bad for our economy in terms of balance of payment terms, and also it causing higher cost to our crude oil import. We are importing largely crude oil in dollar form, so we making payment in dollar form for crude oil import. So it will vanish our forex reserve very quickly, and another also crude oil price itself. So currently Brent crude, it is trading around 117. In September 2021 I was updated when Brent crude was around 73. We forecasted its target around $100, and currently it is 117. Last time we revised its target 105, after that 130. So if this trend is continue and geopolitical tensions continue in future, we may see Brent crude will hitting 140 to 150 dollar per barrel in upcoming time. So both conversion rate of USD INR and Brent crude prices both are shooted upside. Then it is very tough time for Indian economy. Along with that, India's unemployment data also is not very good. Here, according to Trading Economics and World Banks, so this data is showing a very bad picture of unemployment situation in India as currently present. It is worst in last 2 or 3 decades. India have very, not India, almost most of the emerging market countries have similar kind of picture. There is a huge unemployment rate. So this unemployment rate as well as this USD INR conversion rate and Brent crude prices, if these all 3 parameters goes against India's favor, then it is very tough time for Indian economy to tackle this issue. Many economists time by time already advises to governments to take some major steps to reduce impact of this, because it's now almost going out of control. So we have only chance or option to mitigate its effects, bad effects, or reduce its bad effects. So India need to increase its fiscal deficit, which also cause in terms of inflation, because inflation is rises due to multiple factors: crude oil prices, USD INR conversion rate, employment rate, government spending. These are various parameters, and most of the parameters are currently not in the favor to cool down inflation rate. So one factor which can government control, they can't spend less due to there is huge chunk of economy whose income is not at appropriate level. So India have to spend more to increase money circulation in the country. Along with that, monetary policy committee will going to hike interest rates so they can suck up some liquidity from the economy. So this is vicious cycle, and along with that there is a term called stagflation, which means at in economy wherever inflation rates as well as unemployment rate both are at higher level, that called stagflation. And this is vicious cycle and it is very tough to get out from that cycle. So there is a very really tough challenges in front of the Indian economy in upcoming time. Along with that, capital market, which is stock indices, Nifty and Sensex. In last 2 years there is a huge rally in the indices. We all saw that are very madly rally. No one expect such kind of upside rally, but as other factors now arises, and since last 4 months index are in corrective phase and it will bleed more. Just this one sentence for indices. As we saw in last 2.5 years, equity as a wealth creator, now it's time to act equity as wealth destroyers. So do your investment with proper research and with proper expert advice only. So that's all for today. If there is any updates, more updates, I will come up with that. Till now, bye bye. Thank you for listening.